Like I said, at this time, you're no longer allowed to unmute your mic. I do not want to have to leave this call, come to the chat box, fish you out, and send you away. So, good evening, everybody. You're welcome back to another class. Tonight, we're going to be recapping order blocks and fair value gaps. Now, these are literally the blessings of the markets to us traders. They are blessings because I cannot even begin to fathom the amount of money they're going to print for us in the nearest future. All right. I cannot really fathom the amount of money they're going to print for us in the nearest future. Order blocks are wonderful. Um, Fair value gaps are wonderful. Now, there was a post I made one time, and it just showed me how very unintelligent some persons were. I made that post on Twitter, and I was like, breakout blocks are very pointless. Because after I studied order blocks properly, I began to realize that breakout blocks are just basically order blocks with PR, right? It was literally the top of another block that I was calling the breaker block. And then some people were just going on and off and they were like, new age trader. Some persons even called me new age trader. Some people that have never in their life seen a payout before, never in their life gotten any result from trading, open their mouths to call me new age trader. And they will teach you other blocks today and teach you breaker blocks tomorrow and all of that. Now I'm going to make something very clear to all of you who are still growing up as traders. And this is an advice that is coming from the bottom of my heart. Do not ever find yourself in a position where there is no need for improvement. Do not ever think you're going to one day find yourself in a position where there is not going to be any need for improvement. When you're in that particular stage, you tell yourself, okay, I don't need to improve anymore. Jesus have mercy. That is a very bad place to be because you would remain in the same thing forever and ever. I have a friend. I'm going to use him as an example. It's a story. I have a friend who is very close to me. If I call his name, you guys are going to know him. He's very close to me. This friend is also like an idol and all of that, Twitter idol. And he has not seen a payout in a very long time. And he was the person who gave me the first concept I used to actually get in my very good payouts. He has not seen a payout in a very long time. Who is that person? Mute your mic. So he has not seen a payout in a very long time. Oh. And then this thing he actually gave me was working quite all right. Trust me, it was working. But then after a while, I started to notice that, nah, this thing needs some refining. You understand? This thing needs some refining. I need to do a little work on it because the losses I was now beginning to take from that stuff that was working before was no longer usual. I told myself, now I'm going to actually dig in deep. It's a beautiful concept, and I'm going to teach you guys in the class. It's a very beautiful concept, but I need to dig in deep to find out really how can I make it better. And he did not do that. He did not do that. I made my first payout, made my second payout, made my third, made my fourth until I could not keep count anymore. But he had not made a single one. I bought him so many accounts, so many accounts, and none came to fruition. Nothing came to fruition. At some point, I even got tired. So, but it dawned on me, he has a very, very strong mentality. In fact, I tell my other friend that if I have this mentality and I'm profitable, nothing can shake the profitability away from me. And the mentality he has is that he's not flexible at all. He's so rigid. If he learns that A is A today, he never wants to improve. Even if tomorrow A becomes C, A is A to him. A is A. And this is a very, very wrong thing to have. Now, people actually preach to you, stick to one concept, stick to one edge. Like sometimes you can be sticking to the wrong thing and you just be decaying and be going. You can keep on sticking to the wrong thing and you'll be decaying and be going. And so, you know, the whole stick to one thing, don't move another is a very, very bad advice. There are some things that will begin to make sense to you, some advice you listen to, and then you start to question yourself, this advice, gang. Oh, this advice is actually even okay. Like, this advice really, is this advice okay? You understand? So that was what happened to him. Oh. He stuck to one thing. He refused to improve, all in the name of, and it's not the edge, it's psychology and all of that. And I told him countless times, oh, this thing that you're actually doing, you showed me how to do. Sometimes it does not work. These are the reasons why I don't work. This one, and but rigidity, not accepting improvements was what kept him at where he was. Rigidity, not accepting improvement was what kept him at where he was. So let me unmute Marvelous just in case there's any case of there's any this thing network issue.
All right, so thank you for the opportunity.
Yeah. So rigidity kept him at where he was for a very long time. It's still keeping him where he is today. And he came to me and told me, that he wants to actually resume again and all of that. Would I be able to assist him with a prop? I told him, prop is not a problem. I have the money to buy you a prop. But the truth is that at the end of the day, you will not still end up with anything. The real question is, have you done research? Have you done enough self-work to know that, okay, yes, probably this thing I'm doing is not working. It needs a change, blah, blah, blah. Have you done something at all? And he said he was going to paper trade for a while. And then if I see the results and I deem it fit, I give him a new account to trade and all of that. But imagine how long it took for him to realize this. So never tell yourself that enough is enough. Never. Because imagine I listen to Twitter traders. Imagine I listen to these Twitter fingers. Most of all these people, they will just walk around Twitter. Many of them grossly unprofitable and confused. I see a lot of these many of your idols, they're in my DMs. So a lot of them, many of them, they are lost. They don't even know what they're doing. And it's okay to be lost. It's okay to be lost. But it's not okay to stay lost. I tell my people this, it's okay to be lost, but it's not okay to stay lost. When you're lost, come and look for somebody who actually has gone through a good path and is doing something that's okay, you're lacking. You understand? So many of them actually, they are lost, but they stay lost because of that rigidity of a mentality. And it's not the edge. It's not gaslighting yourself. It's not the edge that's the problem. It's the psychology, it's the story for the gods. You'll keep losing and losing and losing until you're tired. For real. So that's not the pain points of the conversation. Why I actually raised this up was because of what happened during the last quiz. Now, this is a demand. Let me even recap that. This is a demand. We say, judging from, sorry, let me use H4. So this is a demand. Judging from equilibrium pricing rule, when we have a demand, we divide it by half, right? And then we want to actually start to look for points of interest inside of that half. And like I said, the only thing that mitigates, that removes the ideology of anything here, as that removes our interest from here, is if there is no point of interest here. That is when we can now start look for points of interest from what's the premium. But the idea is not about knowing whether it's premium or discount. The idea is knowing where, the direction. Now, if it is below on demand, where is it on the supply? Is it not above, my dear friends? Is it not supposed to be above? If it's a supply like this, where are you supposed to look for entry? Is it not above? Supposed to be above, yes. So that's the ideology of the whole thing. But some places we are still telling themselves, oh, buy from premium, buy. What is the problem they name? Or do you want to get the name right, or do you want to make money? And I tossed in that question there for a reason. Because I wanted to see those who would think. And many persons actually got it. Because that sentence is only true for a demand. It's supposed to be below for a demand. It is only true for a demand. It's not true for a supply. When it's a supply, we're supposed to buy above the equilibrium. When it's a demand, we're supposed to buy below the equilibrium. If and only if there is a presence of an unmitigated supply, the point of interest there. So we've learned supply and demand. Inside of supply and demand, we have key levels. Key levels, if you don't know what they mean by now, they are just high priority points of interest. And by high priority points of interest, I said, or they have to be what on the higher time frame, number one. If you're trading on the M15, a much higher time frame key level is your points of interest. Okay, I'm going to give you guys a correlation time frame you can actually use that makes it easier for you. I'm not saying it solves the job, but makes it easier for you. Now, if your higher time frame point of interest is on the H4, you can look forwards your confirmations on the M15. If it's on the daily, you can look for it on the H4. If it's on the weekly, you can also look for it on the H4. And if it's on the monthly, you can look for it on what's the daily. So these are correlation timeframes. You can actually keep that. And if it's on the H1, you can go to M5. Right? If it's on the H4, M15. If it's on the H1, M5. If it's on the daily, H4. If it's on the weekly, H4 as well. If it's on the monthly, D1. Right? So a key level must be on a high priority point of interest. It must be on the high time frame. It must be a valid point of interest. And the only 2 points of interest I want us to pay attention to moving forward is fair value gaps and what order blocks. Now, the video I sent you guys yesterday was a class with my private students. I was teaching them fair value gaps and order blocks. I taught them road blocks too. I taught them breaker blocks as well. I taught them violation blocks as well. All those rubbish I taught them because that was then. But as you proceed, you increase in knowledge and understanding, and some things that used to be before are no longer, and you upgrade your mentality and your mindset, and you move on from past things, and everything becomes anew. Now, right now, the only two other blocks I can beat my chest and tell you for sure, if you focus on just these two, you're going to see higher success in your trading than ever before. Order blocks, fair value gaps. If price does not get to a higher time frame order block, if price does not get to a higher time frame fair value, do nothing. When it comes to technical analysis, the key level is constant. That's why I kept saying it. KL is constant. It doesn't change. There must be a presence of a key level. It's constant. Maybe we should even label it delta for those of you who actually do maths or something. The key level is constant. It does not change. And it must always be available. No key level, no trade. I would have said no target, no trade, but we've not gotten to draw on liquidity yet. But for now, no key level, no trade. Because it's a key level that will sponsor any movement in the market. Yes, it's a key level that will sponsor any movement in the market. If we are saying that the market is going in the downtrend, what sponsors the move to the downtrend are key levels. They are key levels. What sponsors the move to the downside are key levels. So they are very important. They are very, very important. Now, we said a key level can be what? It can be a high or a low, H or L. A high or a low, H or L. I'm going to teach you this one when we get to liquidity, right? It's not something that comes in points of interest. It can also be what? A high time frame POY, which is why I said we should focus on order blocks and fair values. So these two can be an old high or an old low, or can be a POY, right? It can be a POY. Now, what is another block? If I ask every of you, you're going to give me one definition. Another block is the last bearish candle before the bullish break of structure, or the last bullish candle before the bearish break of structure. Many persons have tried their best to remix that particular definition, but I want to tell you today, that definition is still 100% correct. Only if you can just calm down and pay attention to what the definition is actually saying. The order block is the last, a bullish order block is the last bearish candle before the bullish break of structure. And a bearish order block is the last bullish candle before the bearish break of structure. Who turned on his mic? The hangouts, I see what do you call it? Here now. The market review I did, I had to mute everybody. I believe you guys are already mature enough. I don't want to start muting anybody again. So now we now need to ask ourselves, when it comes to order blocks, there is two things I want us to take note about. There is the main order block and there is the main order block is what I'd like to associate as my key level. Let's say let's just call it a high time frame POY, right? Let's call it a high time frame POY for now. And then inside of high time frame POY, there's a knowledge of what we call refining. Refining is what simply going down the time frame to look for an entry opportunity. Refining, entry refinement. And that's what we're going to discuss today. And this entry refinement is what will bring us to change in state of delivery. Because for a very long time, many people have thought that a change in state of delivery is something different. A change in state of delivery is not different. A change in state of delivery is simply an order block. It is an order block inside of a key level, it is the reason to stop or continue. Now, take for example, price has mitigated a very huge daily supply, right? Price has mitigated a very huge daily supply. What we are calling CSD is the order block that agrees with the what with the bias at the moment. So if this is a supply, we need to see an order block that agrees with what a sell, and that is what we need to see a last bullish before what a bearish break of structure, right? The last bullish before a bearish break. Now, this when we see this in a supply, this automatically, this is what many persons do not know is a CSD. This is simply a change in state of delivery. It's not a difficult thing. I'm just trying to draw the wick, right? Sometimes it can sweep, sometimes it cannot sweep, but I prefer it when it sweeps. So know that this is what is a CSD. A CSD can be on any time frame at all, as long as there is what an opposing HTF key level. So if our HTF, if I'm calling my daily HTF and I see this thing on a daily, it can be my CSD. Or if I'm calling let's say I'm calling this one, let's say this is a weekly supply, and I'm seeing this thing on the daily. This daily is a CSD confirming what that the market is what indeed reacting from a supply. It is a confirmation to a reaction inside of a key level. Pass like that. When we get to lower time frames, you're going to realize that the formation of a CISD, which is another block, is the what, because it's not just about key time. The market will have to sweep, will have to purge into an IRL and give you a chain instead of delivery. And chain instead of delivery is literally the same thing. The last bearish candle before the was bullish break. When we see this break, that is a CSD, that is our entry, and we dump if we are going to sell. Let's say for a buy scenario, price actually what? Dumps into the IRL, boom, right? The last down close candle will mark the high or mark the low. When price actually was sweeps it and close above, that is the CSD. Whatever reaction you see that confirms, let me even increase my cursor. Whatever reaction you see that confirms the bias at the moment is your change in state of delivery. It doesn't get better than that. It's your change in state of delivery. Whatever break you see in the direction of that particular trend you want is your CSD. And from the CSD line is your entry, and boom, you take your trades. From the CSD line is your entry, you take your trades. Now, let's quit all of that for now, and let's look at the charts. So you can get your order blocks from any time frame. It is not what you call it, time frame specific. It is not what time frame specific. Now I'm going to explain what happened in this price action. I took this trade, you guys know. I took one from here, still took another one from here, took another one again from here. I don't so much this USD JPY. So I'm going to explain this trade and show you the bias and the what entry, how I use other blocks to enter, because there was not even a single place where fair value gaps helped. So you can see how powerful these things I'm telling you are. So let us actually break it down. Now, all my decisions came from what's the higher time frame. Now, remember that we actually was bearish at first, so in fact, we are not even bearish safe at any point. We just retraced, right? Because this was a break. This was a break. This price rallied this high, and then price started what? Dumping. I don't think I caught. Did I catch any sell? I don't think I caught any sell. Price retraced and then came into this PO. This is another block. Now, another thing many persons actually think is that another block is just going to be 2 candles. Please, if you have that at the back of your mind, delete it immediately. Another block cannot be 2 candles. It can be a lot of candles. It can be 2. It can also be 3. It can be 4. It can be 5 as well. All you just need to know is what? The last down close candle before the bullish break. For example, look at this one on the H4. You can see how it looks. This is the last down close candle, this bearish candle. That is the source candle. When the market closes above it, literally another block has been formed. Now, the other block is correct, but the truth is, many of you will not be able to enter from this other block. Why? Because it is too huge. Me, myself, I'm telling you, let me not even use many of you. Me, myself, I will not enter this order block. I will have it as a reference. So don't get me wrong. I'll have it as a reference because if I want to take an entry from here, if you've actually seen me trade, I'll have it as a reference. Price will stab into it, but I will never take entry like that from there because this cannot even give me 5R. This cannot give me 5R because when I take my trade, I like to have a reference point. Now, this is the highest point after the break. This would be my target, right? If I was going to actually take from here. And if you put a position 2 from here, literally, this is crazy. This is not even up to 5R safe. Like, just see. Oh, my dead body. 2R, okay. I will not do it though. So what I normally do is when price gets to that level, I start to wait to see a reaction, right? I start to wait to see a reaction. Now, this is when this other block has been marked. Now, this is a structural low close to the other block. This is what we call inducements. When we get to inducements, you understand better, do. This is what we call inducements, a kind of like very flimsy low close to the POI. That's the inducement. Now, watch what happens here. Price taps into this level, right? But the move he made before price starts had no high, had no reference high. By reference high, I want to see price actually stab. Remember, I drew something like this. I want to see price stab and just make a close above a relevant high. But price didn't make any single reference high. It was just like a slopey move, like a down move. So basically, my reference high, is this place. If price can close above this place, then I'll consider the trade. But price did not, right? And this was an opposing POI. So this was even a supply. Price actually still sold. But the moment price used this particular level as an engineered liquidity, see what happened. Price came, created this high, created this low, created this high, created this low. See the sweep. Immediately we close above here. That is your change in state of delivery. Immediately we close above there. That is your change in state of delivery. This is your entry. Right? This is your entry. Now, this was where I took this trade, and the trade, USD is a very, very funny aspect. As I said, this USD actually, you're going to learn its ways. As if you're learning from me, you're going to know one advice I'll give you when it comes to trading this pair. If price is about to make a reversal, make sure your entry is on the extreme of extremes. Like when I say extreme of extremes, take note, make sure it's on the extreme points, because that point where you're thinking the market will not get to, it will get there, JPYs. They will get there, they will even literally want to even take you out, say, before they move. So, but I remember this was how the entry was, because I like to mark the body of the candle. Somebody asked on the group, can you mark it from the wick or the body? Anyone at all is correct, but I prefer to see my mitigation on the body, right? That is for me. I prefer to see my mitigation on the body, and this is a good entry, right? See what price that is. Price letter even came down to the tweezer open before it bought. But anyways, as long as your SL was below here, you will still have no issues. Now, price coming down here to react should not even be any of your business. If your stop loss is below this low, they will not hunt you. The point is, when price has given a valid CSD above a point of interest, it becomes final. This low becomes protected. On top of that, even swept the liquidity before itself. So we'll get to that when we get to liquidity. This low becomes protected. Even if let it dance around, it's not going to raid you. It's going to get to the target points, right? So you can see all the rubbish it did, it still ended up going to TP, right? But all these things, they are moves, though. All these things are moves, though, and we do not want to actually miss out on them. So normally, because of experience, I know that this JPY, if it's going to come down, it's going to react from because this low is protected. I will still take another. I took 2 entries from here, just the same trade. The first one mitigated here, went up a bit, then market dropped down again. And my students were like, boss, it's going to hit my SL. And I told them, what's SL? Because I knew it was going to come back to this. It was going to come back to play stupid and go back again. It's USD JPY. So, and this was the entry. The entry was like about 9R, I think. And this was how it was. Right? Now, that is not even that. Now, when the market actually closed above here, right? Closed above here. Remember, there was a high here. This high was what actually gave us what our CSD, or let's say this is not a CSD this time around. This is a change of character. This is the structural high. This is the CSD high. Here's a change of character, and this is a break of structure confirmation, right? Now, remember that we need to actually what? Price needs to come back to at least the equilibrium. And the only thing that can defy an equilibrium, like I said, is presence of what? And a mitigated or non-mitigated point of interest. If there is no mitigated point of interest, price will not return back below the equilibrium. If there's mitigated point of interest, price will return back. So now this break of structure happened above here. The market has not still taken out this high, so there are still so many trade opportunities, right? Market has not taken out this high, so there's still so many trade opportunities. Now this is what happened. The market stabbed into this. This was where I expected the price to come down to around here. This was where I expected it to come down to around here, but it missed entry. Now see what it did. See what it did. It came and it created this thing. And we have a sweep inside the POI. Most likely that area is what's protected. Most likely that area is protected. We're going to learn it when we get to liquidity anyways. So this is the order block. This is the order block. If I'm marking from a major time frame, this is the order block. Right? The last down close candle, when price finally closed above it, it becomes the order block. Can see the break above there, that becomes the order block. And that was where price reacted from. But now, let's say, for example, I do not want to actually risk my money on this trade. I want to see what the market is going to do first before I actually take a decision. I can still wait, right? I can still wait because if there's one advice you're going to take home today, don't rush entries. Don't FOMO. Don't tell yourself I'm going to miss out on this trade. It's a lie. It is just a myth you feed yourself that makes you lose so much more money. The market would always present an entry opportunity. Always. There is nothing like, oh, I've missed, except maybe you don't know what you're doing. But if you know what you're doing, the market is going to always present an entry opportunity. So never for once ever come and tell yourself, oh, I've missed entry. Let me rush and enter CMP. You're just killing yourself. Somebody asked it on my when I posted something, the person asked me, TECHRIZ, this trade, you missed it, but you would have entered CMP. Why didn't you enter CMP? And I told the person I don't really trade CMP. I don't enter CMP. I believe that when the market has moved, if it's going to truly take me in, it's going to actually give me a re-entry opportunity. Now see the progression of what's happening. Inside of this particular level, we have this high, right? This is an untouched drawn liquidity. When we get to long drawn liquidity, you understand better. You think it's just demand and supply, use and start making money. Nah, there's a lot of things. So, there's a lot of things, my dear. So when price tapped into this, as usual, I would have taken an entry from here because I had redid an analysis and found that the pair was truly bullish. And from here to here was more than 5 hours, but I didn't really take an entry from here. So instead, what I did was I had to wait for a reaction. So the first reaction happened here. We broke above this high, break of structure or a minor, these are an internal change of character. An internal change of character. Wherever the market reacted from here, I did not understand. Then we had this second break. This was a confirmation that, okay, yes, we are now bullish. Now, this was where I happily took my entry from with my students. I think on the H8 time frame. No, yes, that was, let me check, H8 time frame. Right. Okay, no. That should be H4. So it was where I happily took my entry here. And note, this is also very important as well. I don't know if it was included in that video, right? If there is a fair value gap before your entry, just like this, most likely just include it. Let's say a minor fair value gap that just comes before your order block. Make sure when you're marking out you include it, because if you check the height from that fair value gap to your point of interest is really not negligible. It's really very negligible. So it's best you actually mark out everything. Mark out from the fair value gap to the order block entirely. And this trade was a very crazy snipe. It didn't even take a lot of time. It sniped and then it just moved, right? But still, like I said, price going to give you so many opportunities to re-enter. This was where I finally took profits. I think I stayed until 5 hour. That one is for sure. Stayed until 5 hour. I never leave before 5 hour. I stayed until 5 hour. And if you leverage this on MT5, this is money. This is money, literally. So now imagine you had missed this mitigation. Imagine you had missed this mitigation, right? The market has made this move. This is another block. This is a re-entry. Is that not? Still on still, the market created something again. When it mitigated it, it created this what? This tweezer level. This is an advanced type of entry though. When I get to DOL, I'll teach you guys how to actually use this entry. This tweezer was the entry, but still on still, the tweezer created what? The morning star order block. And if you were to take a late entry, that would still be your entry. So you see that at the end of the day, you're getting so many entries on this trade and none of them violating the last low or the last point of mitigation. A last point of mitigation is the low that stabbed into the key level, right? None of them violated the last point of mitigation. And this is a beautiful 5-hour trade. A very beautiful 5-hour trade to the target. And still, what if you had missed all the entries, right? What if you had missed all the entries? In fact, I don't think you can miss all the, if you learn from me, I don't think you can miss all the entries, except you're unfortunate. I don't know. But you can't miss all the entries. God forbid. So when we had a break above this high, I'm using this analysis to explain other blocks so you can see what happened. Break above this high, the market just reacted from this. This is also another block. Last bearish candle before the bullish break is also another block. The market reacted from here and went up. But although this type of trades, I don't take this type of trades. Like it feels like I'm rushing the market. Although they may play out, but now I don't do that. But I don't mark my other blocks too like this. I mark my other block from the open, the body. Right, I mark my other block from the body. If it has a huge body from the body, if it has a small body like this one, I mark from the wicks. Right, so use the body size to know. If it has a huge body, I mark from the what's body. If it has a huge wick, I mark from the wick. So I don't take this type of entries, but I'm just trying to show you that. Right, now let's talk about a higher time frame CSD. And I'm going to use EURUSD to explain that. So you see how beautiful this whole move is. It is now beautiful because I have explained it. If you were actually in the market when it was happening, you would have run mad looking for entry. You would have run mad looking for entry because I know some of my friends, they're like, TECHRIZ, tell us when. My private students are like, TECHRIZ, please tell us when you enter. Just let us know. That's all. We just want to know where you enter so we can get our own entry. You would have run mad, but anyways, it takes practice and you get better with time. It's not something you just. It looks very beautiful when it has been explained, but when it's on a live market, gang, that's where the issue is. You would know if you would just be so lost, but it gets better with time. Nobody actually just landed that block and boom, jumped into being a master. Now it will take a little time. Now let's look at EURUSD. Why everybody has been selling and selling and selling. Those who joined the market review saw what happened now. I explained it, but let me not think everybody here joins the market review. But this is the weekly supply. Okay. So this is the daily supply. And you can also have a CSD on the same time frame. That's also a very huge confirmation too. That's the other block. And this is the what? This was a tick up close candle, right? Because this is see what's happening here. This is a break of structure. Price went up, retraced back, right? Price didn't even get into this demand at all. So this is very inefficient. This is liquidity. When we get to liquidity, you understand better. But this is liquidity because it didn't even enter the demand at all. So it's liquidity. If we are ever to turn bearish, this is the first place we need to destroy all those who have their buy entry on this place as liquidity because this is inefficient. So this is bad. Now, so what the market did. The market first tapped the supply, went down, but obviously this is still a bearish move. Remember, we are currently in an opposing POI. This is why you do not ever bank against the daily points of interest. Never. If we get to points of analysis, if you look very close, this is the only unmitigated point of interest here. See, this one has been mitigated by this move. This one has been mitigated by this move. This one has been mitigated by this move. So you can see that the only unmitigated point of interest is this one. And some persons will look at this and I'm telling themselves, nah, we have a break of structure, price is going to take it out. Sorry for you. Sorry for you for real. Because a unmitigated daily point of interest should be a time you just tell yourself to pause and see what the market did. Now, Anyways, people who are still learning cannot get it at once. This is the up close candle. We swept the high and we closed. Yeah, and that's thing I want to talk about. Like I said, I told you guys already now. Another block cannot just be one, it cannot be 2 or 3 candles. Sometimes it can be 4 or 5 candles. So all you need to understand is you need to have the first day up close candle into the points of interest. And then we have price what break it. When price broke below here, I did not even need any Jupiter to tell me that we are bearish. This was the order block. This was the high time frame order block of a reference, right? And some persons took a buy from sell from here, and then we've been dropping since day one. Although now, just like I've told you guys, this type of thing now, I cannot enter this trade because it's not giving me enough RR. It's just be like I'm wasting my time. And this is where entry refinement comes in. When we see this type of things, it's been confirmed on the daily, but we cannot trade on the daily. So what do? We go down to a lower time frame POI. We go down to a lower time frame to search for a point of interest that we can actually use on the lower time frame towards to sell the trade. Now everything here looks mitigated, but there is a technique to enter it even if price has been mitigated all around. Everything here looks mitigated. So, but there's a technique, like I said, below this CSD, above this CSD, if price tags into here at a key time, it's a sign. I'll teach you guys all those things. I don't want to rush it. There's a way to enter even without a POI, as long as price has tapped above an IRL and given at a key time and given a change instead of delivery, you would have sold. This was where my first sell was. This was my first sell. You can see how the market stabbed into that supply, that CSD supply, and then that was my entry, and then we dropped. This was the very first Euro USD entry. My stop loss was below, my take profit was there. It was like, I think 5 hour, maybe 6 hour. Can't even tell. And yes, if everything is correct, trust me, the market will not stop you out. If you get everything right, the market will not stop you out. So that's one. That fear has been eliminated. Even if you like, put your stop losses, rest it on that high, it will not stop you out at all. So, but I think that was a 5 hour trade. And I took another one again around here. Took another one again around here. But they are all lower time frames. So they defeat the purpose of this class. I'm here to just show you other blocks. Now, let's now look at this current price action and see what's happening. Right? Now, first see the daily. First see the daily. Now, this daily is a POI. Although this POI is not clear on the daily, it looks like the fair value gap has been mitigated. For those of you who are very attentive, you can see it. It looks like the fair value gap has been mitigated. So it's not very clear on the daily, but it's clear on the H8. Yeah, it's clear on the H8. So, clear on the H8. This was the other block. Last down close candle. Although many of you know have H8, it's a customized time frame. And boom, we had a close above. Still on still. That's the point of interest that you should actually be wary of. Now, price got to that point of interest. I can't buy from here as usual. What did price do when it gets to that point of interest? It gave what? A CSD. Is this not an order block? Yes or no? Is that not another block? It's another block. So when price taps into a high time frame key level and gives you a change in state of delivery in form of another block, that becomes your what? Your reference point or your entry. And this was where I entered my first buy, right? So he played around a lot too, played around a lot. I was teaching my private students what he was doing here. He played around a lot and it's none of our business. As long as you've gotten the what, your entry and you're in, just allow it to do its thing, right? So this was the first point of entry. Now look at it on the H4, how it looks. Because you can't trade from this huge time frame, right? You need to go to the lower time frame. Now, if you look at it on the H4, we can see this pattern. This pattern gave me my first payouts. This pattern gave me my first payouts. This head and shoulder, inverse head and shoulder, right? Although the market did not come back to mitigate this key level, it didn't come back. It only mitigated this one, this very small one here. It mitigated it. But still on still, if we are going to have anything like a return, I would want it to mitigate here, at least. But now this is where sometimes fair value gaps actually will take over from other blocks, right? Now, see that price tapped into the fair value gap. And I hope by now you guys have this indicator in your charts. Price tapped into the fair value gap. Even if you did not have, even if you didn't really have, even if you didn't trust this particular move, the market still gave you a reason that yes, it is valid. Because when price tapped it, price went above to close above this high. Closing above this high is a break, right? And automatically this becomes another block. This becomes another block, right? So that block even extra confirmed, even swept below here. So automatically that becomes another block. You can totally ignore what is happening here because we now have another block above. It still respected the same thing, stabbed into the higher time frame key level and was closed above. So this is another block. Last bearish candle before the bullish break. Now it still stabbed again and gave another block. Right? But you can see how the market missed that one. The market missed it. If I took this trade, the market would have missed my entry because the market tapped on the open. Market tapped on the high, rather, the high of the candle, right? But if I had entered this trade, I would have missed entry because this is how I would have drawn it, right? This is how I would have drawn it. But still on still, I will still join you on the trade because you know what? When the market closed above this high, that other block was confirmed. When we stabbed into this level, price swept this previous low and broke above this high, creating a new order block. So this is why I tell you guys, you don't rush trade, right? Creating a new order block. And this was where I would have entered. This is where I would have entered. So yeah, sometimes the market can decide to use a fair value instead of another block, right? And the same thing happens, the market goes up. If our EURUSD buys were simpler than sells, buys are always simpler than sells. If you've noticed, buys react from key levels that you can see, but sells react from wherever they want. This is now a break. Now, where is the last bearish candle before the bullish break? This one. This is the other block. So, and it kept happening that way. Now, the market now decided to use this inefficient, or it's even efficient, type 1 efficient. I mean, type 2, okay, no, it's not efficient. It didn't reach. It didn't reach at all. It looks like it reached, but it didn't reach. So, but the market just decided to use this one. I would have not in any world catch this trade, except maybe Nana. I would have not caught it. But the market used this another block too. Market used it and continued upwards. But if you notice, look very closely, you can see that sells. Can you see any other block the sell is actually selling from? You can't see. Can barely even tell what market is doing on these sells. It's just reacting from random levels because I know how many of my students are waiting for price to get to this fair value gap first before they sell, and we just sold. So, but there are techniques to actually counter this type of sells that don't show up with other blocks. There are other entry criteria. It's not just other blocks and fair value gaps, right? That's why I say there's still so much to learn. But other blocks and fair value gaps are the foundation. They are the foundation. Very, very important. They are the foundation. So now the last thing I want to talk about, I'm not sure I talked about in that class, is these types of order blocks. And I taught this one to my designer specifically because you're going to see it a lot often in the market on some occasions, right? Now, there's kind of order blocks that we have like this, where we have this candle. let's say the red one, and then this is the and then we have this. Now, if this candle sweeps the high of this candle, right, and closes below. By close below, I mean this closes below it. Literally, this is another block, right? This is another block, and this is how you mark it from open here to the highest points. From open here to the highest point. So if you have an inside bar, they call it an inside bar, candle that is inside, and the market sweeps it high and close below the low, that is an order block. That is another block. You're going to see most times when price reacts from a level you don't really understand, and you go back, you open your eyes, you see, okay, this is Euro USD. See where we reacted from. Order block. Many persons would have not known that's another block. They would have not known. So I'm just teaching you for today that that is another block. When next you see it, know it's another block. The market has very high potentials of reacting from there if that is the last result. And by last result, I mean is if that's like the only point of interest that is there left behind. Because there was no point of interest. This one has been mitigated. This one has been mitigated. This one has been mitigated. There was no other point of interest but this one. All right, we're going to still learn mitigation. All those things are not really big deals, right? We'll still learn mitigation. So what's the time? 9:54. Oh my goodness. With that said, though, other block and fair value gaps, and we are done with it. We are done with it. Far. We are done with it. So what is going to be happening is that as we are continuing our analysis, we are going to be seeing so many other blocks in the future. We're going to be considering them as we go forward, right? There's still a lot to learn, and there's still so much to perfect. Now, if you want to get better, I'm giving you this advice because I did it for myself and I saw results. If you want to get better at other blocks and um fair value gaps in your free time, this is the weekend. I'm not sure we have any class today and tomorrow or tonight, or if you can after church tomorrow, go on your charts and be marking out other blocks. It may seem like nothing is happening, but trust me, you're reinforcing your knowledge on it. Go to the H4, especially just stay on the H4 because I think H4 other blocks are easy to spot. Be marking out as many other blocks as possible. Keep on doing it, keep on going far back. See where price is reacting from. Ask yourself, is it reacting this last point before price bought? Is there another block? Is there a fair value? Mark it out. Keep on marking them out. Mark as many as you can because you never can tell because this was what I did and I got good at it, right? So I can see another block and say, yes, this is where price is going to react from because it is mitigated or it's not mitigated. When we get to mitigation, I think that's what's going to finalize POIs because points of interest that are mitigated are what liquidity. Or I'm even sending a video on that self. Let's see. But still, go to your charts, Euro USD, GBPUSD, whatever it is. Check for areas where price reacted from or bounced off from. Mark the first point of interest they reacted from. After marking that one, still check, did they give continuations, right? Did they give continuation, just like what's happening here? After they reacted from this huge daily POI, the continuations, how did it happen? Was the order block? Be marking all of them, be marking all of them, be marking all of them, just be marking where it reacted from. Get used to it. Get used to it until nobody can question your perfection of it, right? So it's not something that you just force into your brain. It's something that you get better the more you practice it. You get better the more you practice it. So make sure you do not forget. Practice other block. If you don't practice any other thing in this class, please practice marking out other block because that is the foundation of your mistakes and that is the foundation of your success. Practice marking them out. Fair values, you can, like I said, fair values, don't bother about them because an indicator already does the job for you. Just focus on other blocks itself, right? So let us take questions in the next 30 minutes before we call it tonight.
Hello,
Okay, sir.
good evening.
No. Raise up your hands. Raise up your hands. Thank you. Sir, please cost the video. Thank you, sir.
Show me now. All right, let me pause let me stop the video.